Hey guys, Damon Hart, the Foxy Home Buyer with FoxyHomeBuyer.com. And if you're tuning in for the first time, I'm glad. Thanks for joining us. But what I'm going to tell you today is a little bit about how your credit score is created. Now, when people talk about credit score, they're usually talking about their FICO score, which is just three scores that are taken from the big three CRAs: TransUnion, Equifax, and Experian. They take the middle score, and that becomes your FICO. Okay, um, so I'm going to go through and tell you a little bit how it all works as far as percentages, how it calculates your credit score. So what makes a good credit score versus a bad, and I'm also going to show you how you can get your credit score and know what your FICO is for pretty much as low as $1, and you can get everything on your credit score like instantaneously. Within a couple of keystrokes. So I'm going to share that with you today. Um, if you're, I don't know if you're looking for an actual home to purchase. Most of the folks that come through our rent to own program or own a finance program, they sometimes have a little issue with credit, and that's why they don't qualify within the bank. So we help them with our program to get into homes that they like without going through financing. So if you're not in a situation where you have good credit, obviously it's probably because of one of these factors. First thing that I see most often with people is the payment history. Now, payment history can be things like, your current active cards that you're paying on time if you're paying late. That negatively affects the score, positive if you're paying on time. But what if, right, Damon, what if you have those old things like medical bills, collections, charge-offs, things that don't, you haven't even touched in years, but they're still in your report, and maybe some people are calling you on them. Those things also affect your payment history because they're still reporting. Now, in our program, we help people work through that and help through the credit repair. We help them get all those negative items off and just start working with the positives. Okay, but payment history is, as you can see, the biggest chunk of what makes up that FICO score between all three bureaus. The second is the amounts owed. So think of it like this. The best example I could give you is like, let's say you owe $1,000 on a credit card, or that's your limit on a credit card. Okay. Now the general rule is if you stay under 30% of that balance, the credit still reports positively. As soon as you go over 30%, in that case with $1,000, over $300, it starts to show, or the credit bureau starts to report that, hey, this person might have a little problem paying their bills on time for whatever reason, and that negatively affects the score. Okay, so amounts owed, you want to keep the amounts owed low on any of your revolving debt like credit cards, installment loans, that sort of thing. Keep them low, and that's going to help to boost your score even further. So when people say, hey, get a credit card and pay it off right away, or charge something and pay it off, that's accurate, because if you don't have any balance in the credit cards, credit reporting agencies see that you're paying off your debt and you're able to do that, you're in a much better place. Okay, moving right along to length of credit, it's just as simple as it sounds. If somebody's had a positive credit for the last 20 years, it's much better for an overall credit score, and their credit score is going to be much higher and stronger than somebody that just got credit, a couple months ago, right? It makes sense because credit reporting agencies, they all want to see, or all these lending institutions want to see, can you repay your debt? And if you're a good borrower, they want to lend you some money, right? So that's the better your length of history, the better your score is going to be. Also, new credit. If you haven't had credit before and you're starting to get established, or you've had some issues like a bankruptcy or what have you prior, and now you're reestablishing, new credit, positive new credit is definitely going to help boost your score. And then lastly, types of credit. They call that the credit mix or the credit cocktail. I don't know who comes up with these terms, but anyway, I don't think I've ever looked at my credit score and be like, man, that's a nice cocktail. But a nice mix of credit, things like a mortgage paid on time, car, student loan, installment loans, like a personal loan, also some loans through credit cards. Though that mix and all that stuff paying on time can make for a really high credit score in that percentage. So you see, it's not a huge part, but if you have a nice little mix, that'll take that score from maybe high 700s and boost you up to like the eights if that's what your aim is. So put all that together, what do you got? A pizza, right? No, you got a really great credit score. If you're looking for more information on how to get your credit score, you can go out to some sources. This source is myfico.com. This is where it was provided and gave you some information on it. Another source that I would personally recommend is go to privacyguard.com. Now, you can go to Privacy Guard. I like it because you can go out there and get a trial membership for, I think it's about 14 days for $1, okay? You cannot beat it. They will show you everything on your credit report as far as inquiries, your active trade lines, reports of public records, everything. You'll get everything that you would get on your own credit report if you ran it with a company and paid for it. And you get that for $1 for about 14 days, okay? But here, what I'd like to tell you guys next is kind of how, if you're starting from the bottom, what the hierarchy or what the pyramid is to get your credit score back to normal. So the first thing is, most people that come to us for whatever reason, they have a situation where they've maybe had a BK, a foreclosure, short sale, and no credit, okay? So once they've gone through that crisis mode, the goal here is to reach to the point where they get income stability. Because like I said in the beginning, you're not going to build your credit score. What was the major part of the credit score that they said is the best on the previous slide? Do you remember? Yeah, it was payment history, right? So if you're not paying on time, it doesn't matter how much further you're beyond the crisis state. If you're not paying everything on time, you're never going to be able to get to the next step up towards the top, and that's credit optimization. Okay. In our program, we help our people to restore their credit by getting all the negative items off, like the medical bills and all that other ugly stuff. But if you're not paying on time and reestablishing credit, it's going for naught because you're not going to be able to generate any positives. Okay. And then as you continue to do that, add on those couple of other pieces of the pie, and before you know it, boom, you're at top tier. And you know what that means, right? When you get to the top tier, you get to go out and buy yourself a new Mercedes-Benz or a new Bentley. No, you don't do that. You go out and buy yourself a new house. Or in our case, we get you into a home for some short-term financing, a year or two, and then get you into a bank loan that allow you to stay in the deal for a much longer time and continue to build that positive credit. So that's pretty much how the product works, and that's pretty much how your credit works. So with that said, I hope you guys enjoyed what it is. Like I said, not that complicated, so I'm glad you got it. And if you like what you said or like what I said and have a few other questions, feel free to comment in the section below. And I'm also going to throw a couple of extra websites on there too, where you can get your credit report, a couple of free ones, and also some paid services as well. Different strokes for different folks. But either way, get your hands on your credit report, get that a look and find out where you are. And then, get into action, get with someone that can help you to rebuild the credit and show you how to establish it. And you'll be on the step to having some really bomb credit to either buy a house or just downright not paying so much. Because if you don't have good credit, they're going to come after you and they're going to charge you extra. It's just the way the game is played. So for now, hey, thanks for tuning in, and connect with us on the next one. And don't forget to subscribe. We put a lot of awesome stuff, so can't wait to connect with you then. All right? Thanks for tuning in. And again, this is Damon Hart, Foxy Home Buyer. Till next one, keep it foxy. Bye for now, guys.